Hey guys, Alex Winkler here, and I just quickly want to review a trade that I made yesterday. This was a short I did on Bitfinex. Everything was looking pretty good so far when I first started out, so I was shorting EOS and it couldn't break the $5 mark. There was also a nice little crack in momentum, so it kind of looked like the bears would start taking over. I opened up my position after this little crack right here, and the 5 seemed to be a nice little limit. And overall, the idea was pretty good. I also wasn't too aggressive. I kept kind of averaging into my position into the spikes up, and then on this spike little down, I probably could have sold for a nice little win. The problem was I was looking for an even bigger drop, but that never really happened. And then the price, it held its highs pretty well. And this should have been a huge red flag for me. The problem was I was going, I had some things to do, so I wasn't going to be online. So what I did was I created a stop loss a little below the $5 limit. What happened was I did a stop limit loss. So basically, when the price hits where I want it to go, my limit order gets created. The problem is when there's a spike like this, there's a high chance that my limit order is not going to be executed. And this was a pretty bad decision on my part. This is something I don't even do with equities. I even wrote that down here. I used to never do this. I used to never force a stop loss with equities trading. I also, with equities trading, you have a bit more, I would say, shorter time frames. So when the market opens at 9:30 Eastern Standard Time, you're usually only trading for about an hour, just because in the morning is when all the volatility is there. But with cryptocurrency, sometimes you'll be in a day trade for several hours, and that's kind of what happened to me. So I created, and there's obviously things we have to do in our lives, so we can't be staring at the computer all day. So this is why I made this stop loss. The problem was the price shot up so quickly that I wasn't able to get out of my stop loss, and by the time I got home, I saw I didn't get out, and I got out during this little I guess dip here, which was kind of nice. At least I didn't get out on the super highs. But overall, I took a huge loss here. Dollar-wise, the loss was not too bad. I mean, 138 bucks, whatever, it's fine. The problem is, because I had a pretty small position, the problem is the percentage loss of 4.3% is actually relatively big. So as I build up my portfolio, a loss of 4.3% could, in theory, be losing me a few $1,000s. So this is something I really want to avoid. And this is why I wanted to make a video lesson specifically on this trade. Here are, I guess you could say, 3 scenarios how I should have traded this right, because overall the setup was looking pretty good. So if I could do this again, which I probably would, here's what I would do. One would be either take my position, take a small profit here, take some profits off the table, maybe reduce my position by 50% or something like that. Next thing I would want to do is as the position holds its highs here, I put an X here because this is a bad sign. It's holding its highs, which means it has a potential to break out. And remember, I'm shorting, so I want the price to go down. So now that the price is holding its highs and I know I'm not going to be online, maybe I should just get out, right? There's no reason to take a risk. I already had a small profit if I took some of my profits off the table. So I might as well just get out for a small win or a small loss. Just to kind of reduce the risk, because every minute you're in the market, you are opening up yourself to market risk, and that's just kind of the risk of being exposed to the market. So why not just close the position? The third thing I could have done, if I really wanted to stay in the position, I really believed in it, I could have made a stop loss market order, which I'm not really a big fan of, but maybe something I would have considered. I usually stay away from these things altogether, and I have these mental stop losses. So what would have been better is in this position a stop market order. The reason I'm also not a huge fan of stop market orders is because if the price is going up this fast, my stop market order could be getting executed anywhere along the road, and I could have had an equally bad exit. So stop market orders can be extremely dangerous as well. I guess there is a fourth thing, and that would be potentially trading on my phone and always checking it. But a move like this is extremely fast, and I probably would have missed it. On top of that, margin trading does not work on the Bitfinex app. So that's another problem. It just wouldn't have even been a possibility. So these are all things to consider. The best thing to do usually is, if you're unsure about a position, or if the trade is not going as planned, which I always talk about, just get out. There's no reason, to hang around and take that unnecessary risk. So that's really what I should have done. I was a bit too aggressive and a bit, I guess you could say, overconfident on this trade. If I didn't see this beautiful dip that I was looking for, I should have got out, took my profits while I was ahead. And especially when I saw this holding its highs, which is a huge no-no for a short, I should have gotten out. That's everything I wanted to share with you guys. I hope you learned a good lesson, and looking forward to seeing you guys in the chat room. Ciao, ciao.